Hey traders, welcome to Charts and Coffee. Great to see everybody. Happy Friday, happy options expiration Friday. We're going to be dealing with the again, let's use the word flow and define what it is. So if I'm looking for flow, I'm talking about attention, talking about volume, I'm talking about open interest. And size is attention, right? So basically what we'll be doing as we progress through today is, I know words like max pain and pin and all those are parts of the conversation. But what we want to remember is, where is the size? Because that's going to decode where that attention is. And it's also going to decode that whole max pain conversation. All right, so let's do this here. I'm going to jump into a couple charts. And then, of course, if you have any questions, feel free to type them in. Volume is the big conversation here, gang. And the reason we want to emphasize volume to start is that's where price is going to be most in play. So I'm just going to put a couple ideas in the notes here before we embark on this. So volume is size, but keep in mind a couple things. Size can be based on time. Size can be based on date, right? But size can also be based on price. So this is where anchored volume, weighted average price, this is where volume profile, this is where V-score would kick in. All right, so those are things to keep in mind. Now, on the other measurement, when we're talking about size, the other thing is volume based, right? And then open interest, right? Option open interest. We talk about option open interest. Now we're looking at the number of contracts that are at a particular strike, right? And this is all freely available information. You start putting that together within the context of a trend, and now you've got a really good look at what it is that people have already done. And that's going to gauge whether or not they're up or down. That's going to gauge to a certain degree this gravitational pull towards those thicker levels, those thicker levels of open interest, those thicker levels of volume, specifically on a day like this. Now, you might say, Rog, do I want to keep an eye on this kind of stuff every day? Oh, absolutely, right? If you've been following anything we do here in Charts and Coffee or in the Sector Secrets Mastery as well, it's not just price. It's never just price, gang. I would say, as I'm progressing through this stage of my career, 30 plus years in, it's not just price. It's actually more volume. It's actually more volatility that's dictating what's happening. It's just the nature of the modern markets. It's the evolution of trading. So price always, yes, but we start to layer on other factors, and volume would be a huge one. And I would look at open interest today. All right, so that is this session, but it's always every session. This is just going to be a little bit more exaggerated. All right, so as always, gang, if you have any questions, feel free to type them in. And kicking it off, so on the heels of that, Sadiq asks, can I please elaborate on OPEX, options expiration, and triple witching? And if you think it is still a tradable day. Oh, great question, Sadiq. Is it a tradable day? So let's look at tradability from the perspective of strategy or even time frame. Time frame would be the most important and most basic part of that. Tradability in terms of day trading, I would say is going to be lower. Now, it's been pretty tough anyways. Getting follow through within typical volatility ranges has been tough. My preference, Sadiq, yes, it is going to be tradable. It's really going to be today and Monday in terms of the window. And I would say the most clear opportunity in terms of handling volume and the psychology of today would be probably 1 hour and daily time frames. And here's the important part: in a trend. Yeah. So if we're talking about triple witching and whether or not there's tradability around massive expiration days, the third Friday of the month, the answer is yes, but lengthen the time frame, go to 1 hour, go to a daily and look at those daily price movement ranges. All right, next up, Alex asks, just wanted to thank you for another great year of Charts and Coffee. Thank you. It's our third. Unbelievable. Your dedication and passion are greatly appreciated. My job and my pleasure. Looking forward to a great 2024. Me too, Alex. I'm done with 23. I'm looking forward to 2024, an accommodative Fed and some big time trends. Yep, definitely looking forward to it. All right, next up is what I say that today, options expiration is a caution day for day trading. Great question as far as caution. Now, what would caution mean? So, how do we adapt to days that we're concerned about? Smaller size, more moderate to conservative levels. And is it a caution day? Absolutely. Because whenever you have a heightened sense of attention, focused on open interest, focused on the end of something, meaning we've got hundreds of millions and millions of dollars of options that are expiring, that's going to override other factors in the market. Today, do we care about the Fed? Probably not. Today, do we care about data? Probably not. Today, it's going to be about size and open interest, and it's almost a bubble, right? Today, specifically option expiration, it's almost a little bubble, a little island of sometimes chaos unto itself. So that is definitely, it's a caution day, but it is very tradable. I would forego the day trading. I would focus on the swing. All right, next up is, let's see here. Eddie, how are you? Good morning, Miss Raghee. Good morning. You are my Christmas gift year just by being present during your presentation. Thank you, Eddie. Thank you for your time as always. I never try to take any of that for granted. Thanks for being here for Charts and Coffee. All right, BLP, Meta has been declining lately. Yes. Thank you for mentioning Meta and Google, right? How would I look at whether to bet on continued downside versus buy the dip? So BLP and everyone here, have you heard me say what we trade is more important than how we trade it? And in terms of looking at what we trade, why is what we trade more important than how we trade it? Because our success is built at our watch list level. So if Meta's declining, and it's I won't call it declining as much as, let's be objective about the tools on the screen. It's been in chop, BLP. So decline, ascend, we're going to see a lot of that in chop. The bottom line is, if I have a buy the dip opportunity, it should be focused on trends. So if I contrast Apple to Meta, the major contrast is a trend, Apple, to not trend in Meta. And we can see the same thing happening in Google. We can see the same thing happening in Tesla. So how would I look at it? Here's the simple answer. Don't, right? Look at trending environments versus non-trending environments and focus on the trends for the buy the dip. So awesome question, BLP. Much thanks. All right. Speaking of trending versus non-trending, and I'm looking to make sure I've got the questions here. All right, let's jump on over to those other markets that I mentioned, kind of to avoid for buy the dip. But what can you do, right? So buy the dip is very specific to a trend. It's a retracement. It's a mean reversion. When I'm talking about building a watch list, what we want to remember is it's a focus list, and a focus list should be focused on a singular strategy. Meta's strategy is overbought, oversold. Choppy markets, use a V-score, use a slow stochastic, find where the resistance and the support are within the context of a range, right? So back and forth we go. But my favorite type of market is the one that has picked a direction, and it's going to continue to go in that direction. And we know that buy the dip is going to be most valid. So think about Google, Meta, Tesla as names that are not trending, but we can use daily price movement ranges. Think of names like Apple, Microsoft, Amazon, AMD, Intel, and a number of other names. But those would be more tech related to the ultimate buy the dip, gang, the NASDAQ, right? When we have all those sectors moving higher in a singular index, this is the index to focus on. And that's the contrast. And I'll tell you, if the watch list, focus list building is done with that in mind. Focus on trends first, then look at chop. Then we know we have two different strategies, two different sets of lists that we can focus on. And what we always try to do in the mastery is say, look, where's the most predictability? In a world of probability, where is the most predictability? Never certainty, right? It's going to be in trends. So now, good stuff, good stuff. So as we are starting off with this options expiration Friday, here's what's really cool. Options expiration is a process that we can repeat every single month. Options expiration is the third Friday of every single month. Now, you might say, but wait a minute, Rog, we have options that expire every day. Granted, we have other options that expire Monday, Wednesday, Friday. We have weekly options that expire every single Friday. But that third Friday of the month is still special. That third Friday of the month is where most of the options in the ETF and stock universe are going to expire. And then once a quarter, we get the supermoon of options expiration, a super gravitational pull of options expiration. And that's going to be when we have the witching, the triple witching. And that means three different things are expiring today: futures contracts, our stock options, ETF options, etc. And that's just going to make all of that typical psychology more intense. Look at where size is. Make sure you're looking at size within the context of a trend. And, for me, especially specific to the OPEX today, it's going to be about buy the dip. Is there a short the rip? Should I be focusing on shorts? I've been getting a lot of that question too. Rog, aren't we coming into tax loss harvesting, tax loss selling? Yes, but when I look at the sea of opportunity to the long side, where the trends are visible and more predictable behavior is usually going to reside there, versus the tax loss harvesting, selling things for tax purposes. That's a much smaller list. And there's a lot more uncertainty over that list because we've seen this week the rips higher. We've seen the rips this week where a rip, meaning just zooming higher, where the Federal Reserve is really not backing off rate cuts. In fact, they're really quite, for now, okay with all of us traders and investors expecting a rate cut in March. That's really soon, gang. And that's sooner than we've expected for some time. We cannot be bears in an environment. Yeah, we're going to get pullbacks, right? But that's not going to be the path of least resistance. Those are going to be small windows of opportunity for smaller groups of traders who are just looking for that counter trend trade. But if the river or the elevator, escalator, whatever, is going up, do I really want to try to run down the up escalator or just let the escalator take us higher? That's the difference between counter trend trading and trend following. Yeah, I'm definitely the latter. All right, next up, William, where can we find options open interest? Great question. So options open interest, just by the way, are the number of contracts that are open for that symbol's expiration specific strike, right? So they're specific to the strike. So William, if whatever platform you're on, we use Thinkorswim quite actively here at the Simpler website, the Simpler Rooms, but Tasty and Tradier, any one of these platforms will let you look at open interest, options open interest. You may have to look at the layout on your order entry platform, and you might need to make sure you've got that chosen. Your broker can help you, whatever platform you're on, if you don't see it, but it'll be on your trading platform. So where can you find it? The best place to look for it is going to be on your trading platform. So when I open Thinkorswim, I've got a number of columns that are visible as soon as I bring up a symbol, the bid, the ask, the last, of course, the strike and the expiration, but open interest. And not even volume at the option level. Volume is going to be more at the price level. Option open interest is going to be something you can find on the platform. So yeah, William, just take a look at your platform. Should be there. Pretty easy. And usually that's going to be one of the default settings. All right. Okay. What other questions do we have here this morning, gang? Everyone's kind of tired. It's Friday. It's OpX. You're already thinking about the weekend. Let's see what else we have here. We have our essentials room in the house. And let's see. All right. Cindy asked, thank you, Cindy. Is there a continuous futures contract to trade? I can't find the ticker. So Cindy, continuous contracts. Interesting question. I love that you asked it because I use a continuous contract a lot. What is a continuous contract? First of all, a continuous contract in futures specifically is one that doesn't require us to specify, say, I'm on the NASDAQ right now. It does not require us to specify the NQ symbol, H, which is the contract month we're in right now for March, and then 24, which of course is 2024. A continuous contract does not require me to put in the detail of contract month and year. And it's only going to reflect the action in the March contract of 2024 or whatever the month and year we specify is. Now, when I go to just NQ, /NQ, this is the NASDAQ contract as it goes from December to March to June to September. So it's actually reflecting the price in every one of those contracts when they are known as the front month or the one that we're trading. And it just seamlessly shows what that contract to contract to contract price is. Hence those gaps we'll see on a continuous contract as we roll from wherever the December contract stopped trading to where the March contract started trading. What's that difference in price on a specific day? We cannot trade the continuous contract because when our brokerage is communicating to, say, the Chicago Mercantile Exchange, it's to say we want to buy the NASDAQ, because it's a futures contract, the contract month is a requirement for them to know what it is you want to buy. Because some traders might be, yesterday, today, trading still the December contract. It's still trading. And others have already moved on to March. So we have to let our broker know, because that's how it's going to be communicated to the exchange as to which contract we're trading. It's a lot like if I'm trading Apple options, I've got to tell my broker which expiration. Let's say I want to buy the 195 call. I still have to let my broker know which expiration of 195 call I want. So that's why we can't trade a continuous contract, because it lacks that specific information that our broker needs in order to fill our trade. All right. Next up is SJ asks, is my Sector Secrets program, do I consider longer term options, 3 months, 6 months, 1 year, given the uptrend or focus on weekly options? SJ, we're not fixated on a particular expiration. So the question is, what kinds of expirations, what kind of time horizons do we focus on in the mastery? And really, it's sort of all of them. Lorna bought scalps, so that's a very short-term time horizon. I day trade, short-term time horizon. But then we actually have short-term swing trades, which are time horizons of 2 to 10 days. We have longer, on average. We also have longer-term swing trades, which could take us far longer than a handful of days, right? And then we have our weekly position conversation where we look at a weekly time frame and our time horizon is 6 months or greater. So the time frame will oftentimes dictate the time horizon. So the simpler answer is yes, I do. But I don't want anyone thinking that it's just about long term or just about short term. If we know how to follow trends in a 5-minute, we know how to follow trends in a weekly. And that's the way in which we look at the markets and the mastery, which is, let's find a trend. The time frame will dictate the time horizon, and we'll look for our opportunity. So I love the longer term. In fact, probably, and I was just talking to the Trish boss yesterday, at some point, probably early next year, we'll talk about what 2023 yielded on that Sector Secrets Mastery longer term portfolio. It was actually pretty darn good. So we will talk about that pretty soon. I don't know when that will be, but stick around. I'm sure we'll post it over at countdowntrader.com. And I'll definitely mention it here in Charts and Coffee. All right. Next up is Eddie asks, what would happen if the Federal Reserve does not drop the rates in that March meeting or by April? What would happen if we get to March where we're expecting a rate cut and we get nothing? The equity markets would sell off dramatically. it's not going to be that black and white. It's not going to be that binary. The Federal Reserve will talk less dovishly. If they're doing their job properly, their words will project their actions, and then their actions ultimately culminate in the meeting. But let's say we're at 65, 70, 80% expectation for that quarter point cut based on the Fed fund futures and this target probability graph in front of you, and they don't cut. Oh yeah, chaos. That's what's going to happen, and in a fairly significant sell-off, right? Okay, gang. And by the way, we've seen this, Eddie. And if you want to look at what happens in the aftermath of such poor respect for market expectation, take a look at Q4 2018 to Q1 2019, and you will see the anarchy that ensued when the Federal Reserve did just that. And that was Powell, by the way. I don't think he'll do that again. All right, gang, as always, thank you so much for being here for our Charts and Coffee session. By the way, we do have Top Tier Outlook coming up on Sunday at 6 p.m. where you can meet up with me and prepare for the coming week. All right, gang, be good to each other. I'll talk with you soon.